please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let me tell you, the budget day ratings are here, and it's yet another stellar show by CNBC TV18. Your channel was the #1 English news channel and the #1 business news channel on budget day. In fact, during the finance minister's budget day speech, CNBC TV18's market share was bigger than all English news channels put together, almost 16 times more than that of Times Now and over 10 times that of Republic TV. All through the day on February 1st, CNBC TV18's market share was 7.5 times more than Times Now and 4.5 times more than Republic TV. We would, of course, like to thank all our viewers for such a resounding and overwhelming response and for all the support you've shown us through the year. It's because of you that we're here today. So let's get you the news now. Let's look at today's trading action. After 7 days, the Lal Street finally managed to break its losing streak and saw broad-based gains across all the counters. So let's pull that Nifty up for you. The Nifty breached that 10,600 level intraday, but saw selling pressure by the end of it. Still managed to close with gains of about 1%. Now, Sensex also ended with gains of about 1% by the end of the day. The mid-caps outperformed the benchmarks, with that index rallying about 350 points in trade. The bank Nifty stocks ended in the green today as well, and that index as a whole gained 1% in trade. Anuj Singhal is here to take us through the day's trading action. Anuj, some amount of the losses that were seen in the last two trading sessions being recouped today?
Well, good day for the markets. A big bounce back. Broad-based buying is what we saw, though the markets failed to close at the highest point of the day. But that's okay, because you may not want to take an overnight risk with the way US markets are shaping up of late. The big story today was earnings. And even though we are at the back end of the earnings, today a lot of earnings really surprised the markets on the positive side. So that really is the one which stands out. It was led by Cipla. In fact, Cipla led the big pharma rally today. After that positive commentary from the management, we had the company's CEO also on the channel, and Sun Pharma, Dr. Reddy's, all these stocks also rallied in trade. Other Nifty gainers included names like Ambuja Cement, SBI and Infosys. But it was, as I said, about earnings. So ACC, stunning numbers. Bharat Forge, spectacular numbers. Page Industries, remarkable numbers once again. Heidelberg Cement, post numbers was up 8%. Muthoot Finance, very strong set of numbers. Balrampur Chini was a disappointment in numbers, but they made up for that with that buyback announcement, so that stock also rallied. And some big F&O gainers today, names like Sun TV, Reliance Capital, IDBI Bank and Jindal Steel and Power. So all in all, the market is now at a crucial level. 10,550 to 600 is where last time it took support as well. So this zone is important. And of course, what happens to US market, that remains the decisive factor.
Okay, Anuj, fair enough. We'll leave it at that. But from the last day, let's get to global markets. The Nikkei rallied more than 1% today. And if you look at the Hang Seng ended about 0.5% in the green. Shanghai, however, was the only one that was still seeing losses, down by about 1.4%. Let's pull up the European markets also while we are at it. We saw European markets continuing their dismal performance. So look at the British FTSE down by about 0.6%, the CAC down by 0.7%, and look at the DAC losing almost 131 points. So some amount of losses, yes, being recouped in Asia, but Europe still seems to be in the red. Let's get you exclusive corporate stories back home. And this one is from the insolvency space. We learned from sources that two companies have submitted binding bids for Bhushan Power and Steel. Remember, the deadline for the submission of bids for Bhushan Power and Steel closed today at 2 p.m. Before any confusion, there is essentially two companies. One is Bhushan Steel, which we've already reported on, and there is Bhushan Power and Steel. Ritu Singh is here with the details. Ritu, you broke the exclusive story on Bhushan Steel. Now, who are the two players that are looking at Bhushan Power and Steel, and what's the valuation looking like?
Well, JSW and Tata Steel seem to have locked horns yet again for another Bhushan company. Bhushan Steel was the first one where the both of them had submitted binding bids. And now for Bhushan Power, which is, the second company owned by Sanjay Singhal, is where they have submitted firm bids. Remember, the deadline to submit bids or binding bids for Bhushan Power ended today at 2 p.m. and only 2 bids were placed, despite, multiple other players expressing interests earlier. Conspicuous by its absence was Vedanta, which was conducting a due diligence but did not submit a bid by the end of the process. Now, what the valuation is exactly is yet to be seen because the bids haven't been opened yet. But what we do know is that the liquidation value of the company is about 12,000 crore rupees, and the fair value of the company, which means the replacement cost of all the plants and assets, that is about 24,000 crore rupees. So expect the bids to be anywhere upwards of 24,000 crore rupees. They should be marked to what the fair valuation is, which was disclosed to the COC just day before yesterday. Now remember, the debt on the company's books is currently about 47,000 crore rupees, and there's additional claims also made by many financial creditors. So the kind of haircut that the banks are expecting is anywhere upwards of 40%. But of course, all of that remains to be seen as and when those bids are opened. For now, we've written to both of the companies. JSW declined to comment on our query, and we're awaiting comments from Tata Steel.
Okay, fair enough. Thanks, Ritu, for taking us through those details. Of course, in the next few weeks, we will get some clarity on who exactly emerges the buyer. For now, let's move on to an exclusive interview. Status quo on corporate tax rate for large firms doesn't make India uncompetitive. That's the word coming in from the global head of tax at KPMG, Jane McCormick. However, in an exclusive conversation with CNBC TV18's Prashant Nair, KPMG's global tax head also said that going ahead, India may need to reduce the tax rate. Here's a slice of that interview.
Does it make India uncompetitive, the fact that we didn't do anything about the corporate tax rate?
I don't think the change in corporate tax rate necessarily makes India uncompetitive. Business decisions, investment decisions are made on all sorts of criteria, of which the tax rate is only one. I was here this time last year and I was asked a very similar question about the tax rate. And at that time what I said was actually I didn't think the tax rate was that important. It was more important for India to make strides on ease of doing business. Now the good news is that those strides have been made. I think 30 places in the rankings, the global rankings, have been gained in that last year. So I think India is still an attractive place for investment. Looking forward, though, I think the rate might become an issue. We've seen US tax reform take the rate down from 35 to 21. Rates generally going around the world are going lower. So it is something that probably the government needs to start thinking about. I would say one thing, though. The trend globally has been for the rate to go down, but at the same time, the base to expand. So the overall effective rate of tax is not necessarily changing that much. So whilst you may need to think about the rate in India, it's also worth thinking about how the base is expanded to make sure you protect the Indian tax base vis-a-vis others.
The tax revenues for the government?
Well, basically the taxable profit on which the rate is applied.
Right.
So what you've seen in other countries is that the rate has gone down, but the base has been expanded by the denial of deductions for things like interest expense.
Okay. I mean, so in the US, for example, we're talking about 21%?
Yes.
And you're saying one should look at that in context to exemptions, etc., going away? Exactly.
So part of the rate reduction in the United States has been paid for by the loss of other deductions, interest expense being the main one. Right. They've actually left a gap in the US, so the rate reduction is more beneficial than the base expansion. In other countries, that trade-off has been closer, so the base expansion has compensated for the rate reduction.
Sure. Same is true in the UK as well, where the proposal is to...
That's right, yes. So the rate has come down, but the base is expanded through things like the diverted profits tax.
You said this will become an issue going forward. I mean, how big an issue will this be?
Well, it's always difficult to tell because, as I say, investment decisions are made on a number of criteria, and India has the advantage of being the fastest growing economy in the world at the moment. So in that situation, you can afford maybe to take a higher tax rate if you think you're going to get a better pre-tax return. But as I say, global tax rates are sort of coming down to somewhere around 20%. 15% differential can make a big difference to an investment decision. So I think that will necessarily
But here
have to
in
change.
India, it doesn't look like there's that much room to maneuver around with lower tax rates. We've just had a big transformation with GST, and that is yet to stabilize in terms of monthly revenues running at subpar.
And that's I guess why I'm saying that it's about looking forward rather than what needs to be done now. If you look in most developed economies, corporate income tax is a relatively small part of the total tax take.
Sure.
And that's sort of deliberate because obviously high corporate income tax rates can act as a disincentive to investment. But on the other hand, the government still needs to collect the taxes that they need to do to pay for all the social goods that we want. And in most countries, that slack, if you like, has been taken up by indirect taxes, by GST. Which is obviously the direction of travel in India too, but you quite rightly say it needs a while to bed in. So unless and until that has bedded in, I think the business community will understand that we need to be a little bit patient on reduction of the corporate income tax.
The second day of India's biggest auto show, Auto Expo 2018. Now, the big focus this year is very clearly on electric vehicles, with most Motown participants showcasing their offerings for that very segment. The Auto Expo is in fact also buzzing with several new launches across segments. So today, Toyota unveiled its Yaris, which will be launched in May 2018. Take a look.
Toyota's City, Ciaz and Verna arrival has been a long time coming, and now it's finally made an appearance in the Indian market. It's called the Yaris. Many, including us, speculated that it would be the Vios that Toyota is planning for the Indian market. But what we have is the Yaris. Now, the Yaris and the Vios are both based on the same platform. It's a few design details that actually differentiates the two cars. Now, this particular model has a slightly sharper design. If you look at the headlights, if you look at the wide grille, the DRLs, everything sort of shows a width of the vehicle in a very sharp manner. You have sleek headlamps, you have sleek tail lamps, and that gives this car a slightly sporty appearance as compared to the Vios. Toyota has tried to give this cabin a slightly sportier edge over the rivals. You get this bolstered steering wheel, you get these nice analog clocks for the tachometer, the speedometer, you get a 4.2-inch multi-information display. You have these sleek AC vents as well, so I think it looks quite nice and sporty. Now, instead of going with an all-black layout like what is popular with the Yaris in the Asian markets, Toyota has chosen the more popular color scheme for the Indian market, which is the black and the beige, and I think it looks quite good. The touchscreen infotainment, it's a 7-inch system. I think it looks okay, but we have seen better in this particular segment, so that's a bit of a downer for me. Overall, the cabin has a nice youthful vibe to it, which is a good thing, but we have seen better in this segment as well. But like I always say, design is something of a personal choice. I personally like this. I think it looks quite premium. The Yaris is quite a popular model in the Asian as well as the global markets. The India spec model, however, differentiates itself by riding slightly higher, and that is to compensate for the bad roads that the car will tackle on our roads. Now, we are all speculating there will be a petrol and a diesel motor, but the diesel, for now, is not going to be available. There's only going to be a petrol motor. It's a 1.5-litre petrol engine. It's based on the same engine that powers the Etios, but this one gets dual or rather variable wall timing on both the exhaust and the intake ports. What that does is higher power. I'm expecting somewhere in the range of about 107 to 110 PS of power and about 140 Newton meters of torque. So when is it going to launch? I think May is going to be a safe bet. That is what the Toyota guys are hinting. May 2018 is when we'll see the Yaris enter the market, and that is when we'll have all the details on the pricing and also on the variants. So stay tuned to Overdrive. We will get you all the info from the launch as and when it happens.
Let's get you a story that seems to be fairly interesting, and we will take forward a little later. United States has handed India a slightly better rank when it comes to protecting intellectual property. But India remains in the bottom half of the rankings even now. And even last year this was the case. The Global Innovation Policy Center of the US Chamber of Commerce releases annual ranking on how countries are faring on protecting trademarks and patents. This year, India has been ranked 44 out of 50 nations. So this, yes, is a marginal improvement from last year when India was ranked 43rd out of 45 nations. India has been given an overall score of 30. This is well below the regional average of 52, but this is better than the average of bottom third nations. The top 5 nations average a whopping 93 on the index. The United States has been ranked as the best nation in protecting intellectual property. United Kingdom, Sweden, France and Germany complete the top 5 best performers. The United States has lauded India, though, for taking few steps to improve intellectual property rights regime, but India is still the worst performing nation among the BRICS, which includes several players, but China is the best performer. But we will be taking this discussion further on India Business Hour. But for now, it's time to wrap up this edition of India Business Hour. Thank you so much for watching this show.